Johnson&Johnson could not sustain the momentum from the vaccine surge. You obviously heard that Johnson&Johnson, they've started a trial on their what is it called, last phase, some like key stage COVID-19 vaccine testing. So these are the various news items. There's Johnson& Johnson stock rallies after phase 3 trial launched for COVID-19 vaccine candidate. Johnson& Johnson stock pops on late stage vaccine trials. Okay, Johnson& Johnson stock outperforms competitors. And okay, so you heard what was going on, and the folks at Schaeffer Investment Research has it that the shares of Johnson& Johnson were up 1.2% at 145.95 yesterday morning, 23rd of September 2020, after the company kicked off a late stage 60,000 person trial of a single shot COVID-19 vaccine with result expected by either the end of the year 2020 or early 2021. A single shot vaccine could simplify the distribution of millions of doses compared to leading rivals that require two doses. Okay. So on the charts, the security has struggled to gain long-term momentum. In fact, the shares have traded mostly sideways over the couple of months and is now seeing pressure emerging at the 20-day moving average year to date. Johnson & Johnson still sits below its break-even mark, and 12 of the 16 analysts in coverage hold it a buy, and the rest are just a tepid hold. So this is the chart. But before we come back to that, we just want to have a quick look at the some of the basic details there. She has a put call ratio of 0.4 for the last trading day, 0.6 for the last 30 days. Price performance comparison. And the last 1 month has been negative, and S&P US healthcare also negative, but Johnson & Johnson fared worse. But it fared better than the S&P 500. In the last 6 months, okay, it was still also behind the rest of them. The last 6 months, it was only up by 14.12%, and the S&P US healthcare was up 39.95%. Global BMI was up 44.43. So we just come over here and at chat mail and see what they're saying technically, or rather fundamentally, since we were talking about fundamentals. So fundamentally, it's more obviously, you may have known that it's more of its biggest attribute is profitability, followed by health and dividend. But it's just not so much on valuation and growth. Well, we would expect that there's some amount of growth will be there because the health sector, they are part of the three sectors that are currently benefiting from the incidence of the COVID-19. So they said they have it here that Johnson & Johnson has a return of assets of 9.59%, which is among the best returns in the industry. The industry average is minus 37.05. Johnson & Johnson outperforms 94% of its industry peers. On equity, Johnson's return on equity is 24.11%, is among the best of the industry. Johnson& Johnson does better than the industry average return on equity of 14.20%. Profit margins of 18.86% is among the best return of the industry, outperforms 91% of its industry peers. The industry average is minus 210.73%. Valuation, it has a price earnings ratios 18.12, which indicates a rather expensive current valuation of Johnson & Johnson. Johnson's price earning ratio is in line with the industry average, which is at 15.43. The forward price earnings ratio is 16.16, indicates a correct valuation of Johnson & Johnson. With a price book ratio of 6.04, Johnson & Johnson is valued correctly. And earnings per share growth is accelerating in the next 2 years. The growth will be better than in the last year. The earnings per share for Johnson & Johnson have decreased by minus 8.39% in the last year. Measured over the past 5 years, Johnson & Johnson shows a small growth in earnings per share. The earnings per share has been growing at 5.15% average per year. And shows a decrease in revenue in the last year, decreased by minus 1.01%. Shows a small growth in revenue, increased over the last 5 years. It's growing by 2.8% annually. So we come back to the technical analysis. It's currently trading in the upper part of its 52-week range. The S&P 500 is also trading in the upper part of its 52-week range. So Johnson & Johnson is performing more or less in line with the market. Has an average volume of 6 million 12,800 shares. This is a good sign. It's liquid. It's a liquid stock. Long-term trend is neutral, but the short-term trend is negative. Better stay away from this. Okay. So now come back to the chart so you can see what's going on here. This is year to date. So we can see it moved slightly. We'll call this a sideways movement. It's so that price is it closed at 144.44. So, and that price is what? Okay, so just a slight improvement, but of course we know that the broader market depreciated yesterday. So that news concerning its vaccine exercise was overshadowed by the news concerning the broader economy from Powell and the Senate and the House hearing he was testifying at. So you can see, but you wouldn't see a lot from that. So we just go in here and see what happened on the day yesterday. So we can see it closed at 144, but it reached 146 at some point. So that was a surge they are talking about over there. That was 12:57 p.m. New York time. It reached 146. And the previous day it closed at 144.24. So this will give you an increase of $2.54. So where would you put that? 10% is 146, so 1% is 14. So something close to 2%. Yeah, something close to 2% on that, on the back of that COVID vaccine tests, the progress in that, and the fact that it is a single dose shot. So, but after that, it began to decline and close down. So, but over the long or medium to long term, it has been it has not been a very wonderful looking stock as such. All in all, you can just see that um, for some time it has been moving sideways a little bit. That in June it made some progress and started to started to after this pullback below its short-term trend line. It started that on the 10th of June, but by the 26th of June started to move up again, and then you can see that the trend line also looked up. So, but since that time, it has been pretty much sideways, in as much as it looks the chart itself looks like it's progressing, but this trend line is not exactly uh, an upward looking one, not so positive as such, but it is something. But so you can see what they're saying that in the short term, what would that be? Short term, it is the guys at Chatmill have it at in the short term. Sorry, short term. This is a technical analysis. Yes, technical analysis is negative. Short time, the trend line is negative, which is this is the 20-day. So it's a short term trend line. You can see this pointing downwards. So this is over the period of 9 months or thereabout, because this is year to date. You can see from the 1st of January to 24th of September. So, but even at that, um, uh, market participants might see this as an opportunity to jump in on the equity. As you can see, it is trading definitely below the short-term trend line. It's trending below the medium-term trend line. The two of them have converged. The medium-term and the short-term have both converged, and these guys have it that Chartmill. These folks at Chartmill, they have it that long-term trend line, okay, is neutral. Okay, we don't have that. The long-term trend line will be the 200-day or something like that. So let's add it. So it is, according to them, is neutral, even though it doesn't look so much or so. Okay, yeah. Well, of late, yes, it looks a little bit. It looks a little bit neutral, but it's the equity itself is trading below the short term, the medium term, and the long term. So um, it's yes, for sure. Market participants will be definitely watching this. When you see a pullback like this, it's for some participants, it is an opportunity to join in, to jump in. But on the other hand, as well, you have those ratings that you have analysts who are very much bullish, leaving room for little or no upgrades. So you might expect that there might be, if anything, there might be downgrades. Since like 12 out of the 16 are positive, and then the rest are just hold. So yeah, you might want to think that that is what's going to happen. It has a put call ratio of 0.4. It will take about more than 1 day to cover. That's still not very healthy, but technically, that is where the show is. And also coupled with its fundamental efforts in getting a single dose shot of its vaccine, which is not what their competitors are doing. Their competitors are doing two shots, and they are doing a single dose shot. So it is by far much more commendable. You would rather you rather have one shot and get it done and over with than coming back for two shots. So there's an inclination that if it turns out positive, then the adoption of their vaccine is much more likely. So they've taken that bold step to go in that direction, and it's sounding good to people, even though this is not a scientific analysis of it, but on the face of it, why not one? Why should it? Why two? Why two or more? Why more than one? So going on from there, so these guys that they have it that on the option side of things, yeah, they're saying it's spots a volatility index of 24%, in just the 19th percentile of all the other, which is just which sits in just the 19th percentile of all the other annual readings, meaning the equity spots attractively priced at spots attractively priced premiums at the moment. In other words, this makes now a good time to weigh in on Johnson&Johnson. Okay, yeah. So maybe a lot of things have start to add up, add up a bit, But yes, like we said, technically it looks, it looks like something to observe and wait and see, or probably, jump in, So, but on the option side, they have it at yes, 50-day call put volume of 3.65%, indicating that the options traders prefer the calls. So you can see what's going on here. These are the contracts that will expire tomorrow, the 25th of September, and so you can see some open interests are still here on the put side. These are the folks betting that Johnson&Johnson might continue to progress forward. So that means if it keeps going up, then their interest will expire in the money, and it will be exercised. So I want to believe that these guys may have bought the equity at a higher price, probably, or not. Let's see what's going on here. So let's see from the charts. So since when did we reach 145? When was it ever at 145? 146. So we're talking about 10th of September. That was the last time it was at close to 145. So I can imagine. Let's say that let's assume that those guys got in from the 14th of August, which at that time it was at $147.30. So 147.30. Can even see. So if they got in there, they are betting that um, they would have bought it at a premium as well, um, much more than it is currently now. So they will be betting that uh, so as it stands right now, um, if if one jumps in as things stand now and buy this some of these positions, especially let's see now this.